One, go.
Hi guys, good afternoon. You've tuned into Money Control. I'm Karunya Rao. With me is Manisha Gupta, and we're here to give you an all-round update on what's happening in the commodities space. Now today, everything seems to be trading lower, just like the equity markets. Even in the commodity space, yesterday also we talked about how metal prices were lower. There's crude which is looking weak, gold is looking weak as well. So let's slice and dice one by one. Metals, of course, we talked about the key factors. What is the update there in terms of the downslide?
Oh, well, yes, it just about continues. As we were discussing earlier as well, this is not a place you want to get into buying. But the funny part really, Karunya, is that you have two reports in last 2 days, one from Goldman Sachs, which says that copper prices are headed higher to $10,500 a ton. It's trading at 7,600 right now. What would really push the prices there unless there is something that we don't know about. And then there is a city report which says that whether you look at recession fears, weak Chinese demand, or the complete lack of a stimulus into this market, unless one of these things happen, they do not see prices going up, and they've given a bearish forecast for the rest of this year. So these are really very two divergent reports there.
But just like how it happened with oil last week.
Oh, well, yes. But that's exactly what we're looking at. So further weakness in case of metals here, yes. And markets do believe that especially those metals where the inventories are rising and demand is not, are those metals which are more vulnerable. So you have copper in case, you have steel in case, where the Chinese inventories are much on the higher side. In case of copper, even the LME inventories have been increasing on a week-on-week basis. So these are a couple of metals which are actually bearish. And for copper especially, the hedge funds really seem to be abandoning this one right now. The long wagers are absolutely off the book, and there are new short wagers coming in. So that means people are betting on even lower levels from here.
So when you say it's not a good time to be buying metals right now, should one also stay clear of any of these miners and producers as well? Because that's an extension of what's happening in the commodity.
It clearly does look like that, yes. The kind of decline that we've seen into the markets, the decline has been so much so that people do not even want scrap right now because the decline is so immense. Yes, we still are much higher than where the prices were 2 years ago, but with the kind of the decline that the markets have seen, and even as we've come down by 20 to 40% in some of these metals, just the fact that we're not near the level of pre-COVID, you still have some more space to go down.
So could that happen?
That could happen.
Okay. And this year itself?
It could happen in this quarter itself, the kind of sell-off that we've seen. Because the last quarter was the worst since 2008. We saw 25% of a cut on LME index itself. Every metal has been down anywhere between 80 to 48%. So yes, what we are looking at is some more slide that could actually happen within this quarter itself.
Okay, and what happened to precious metal then in this case? Because typically, I mean, not typically, but very rarely do we see that markets are falling, metals are falling, the precious metal is down, and so is oil. So what's happening in gold market?
So what I've seen as a change happen in the last quarter is nobody's calling Dr. Copper anymore. Nobody's calling gold as a safe haven anymore. And there is a king dollar that has emerged.
Yeah.
And that really seems to be being spoken about. So yes, with the dollar index at 108, there is very less reason for you to buy into gold and silver. The treasury notes seem to be doing well. There is more interest rate hikes coming in, and that is where you could be looking at more money being made. And it is a safe haven right now. Is the reason we're looking at a 9-month close in case of gold. It has been a big fall from the high of this year, from 2058 to 1728 of a low that we've seen, and the street still expects a sub 1700 before we see buying coming in.
So once it reaches that 1700 mark, could there be further downtick? Anything that the experts are saying?
The chartists are telling us that 1698 seems like a strong support, or the prices could go to 1680, but anything sub 1700 is a good time to start going long for sure.
Oh, great. That's, I'm sure, some good news coming in amid all the gloom and doom. And what exactly is driving, or rather pulling, the crude prices lower?
Demand concerns again, and the fact that all the economic data has been on the weaker side, and for some time right now markets seem to be really shrugging off that supply concerns. Well, some of them have been averted, but with Russia now, the focus really seems to have actually shifted to gas right now, because we've seen 12% of gains in case of gas prices, with Russian Nord 1 stream pipeline going for a maintenance. Concerns also with the CPC pipeline. So that is where the concerns really seem to be coming in. So crude, when you look at the volumes as well, the last couple of days has been steady. We are holding above $100 a barrel. The demand is a bit of a concern, so is supply. But gas really seems in the center stage. I remember we talking so much about gas, on how it's an environment-friendly gas, how every country should have a gas mix within their energy basket. And with the way the gas is behaving right now, with the price rise and the unavailability onto that, there's a big question mark that do we now need and other gas, or is it going to be two worlds now? One that is Russia and China, and the other which is OPEC and the Western world. So there's a lot of conversation within the energy basket right now. Having said that, are you buying crude oil right now? Not too many people, because they still expect there is some more decline here before we start.
So sub 100 could be on the cards.
It could be on the cards.
So what is a good place to be right now? I mean, all the asset classes. I mean, not just commodities, but with dollar, with the rupee weakening, uh, all the commodities correcting a fair bit. Gold, you said, could be good sub 1700, but anywhere else that one can look at.
So I think I was talking to a lot of people in the market on where is the cash being parked right now. So a lot of people sat on the sidelines, but a lot of people are also buying into gold and silver. Silver essentially because India imported 700 tons of silver last month. Nearly 500 tons is in pipeline this month as well. And people were telling me that 1 kg bars is what people are buying in sense of silver. Gold is being picked up on a higher volume as well, because the understanding of the market is that once all of this is done, gold will be back in flavor, and that usually is the pattern. Once we are at the fag end of the rate hike cycle, it is gold which actually runs up the first and the fastest. Okay. So that's exactly what people are
preparing for the
timing that.
Yeah. Okay. All right. Well, that's all we have in today's update on commodities. Thank you so much for tuning in. We'll be back again at 1 o'clock.